Welcome to Stockwatch with me, Simon Brown. And joining me to unpack your stock-related questions today, David Shapiro, Sasfin Securities, Schalk, Louw, PSG Wealth, Old Oak. Be sure to send your questions. Email stockwatch@bdtv.co.za, SMS 41392, or on Twitter @BusinessDayTV, #Stockwatch. James, thanks for joining us. Schalk, let's start with you. July inflation just came out 3.5%, with our MPC anchoring at 3%, a bit of an ouch number.
Yeah, it's we wanted to be lower. We wanted to see it lower, and no, we would definitely. No, we're looking towards the Fed now, the 17th of September, and I think consensus, even before this numbers came in, consensus came in that they didn't expect the SARB to reduce rates any further for now, and which I thought was quite surprising. I do think that a quarter of a percentage points every time that we've seen it. I think we could have done more. Yeah. I think we're sitting with a struggling economy. We're sitting with a struggling unemployment rate. I can go on. I mean, 1% outlook from the IMF side, and I think most of the banks that came out, Nedbank, Standard Bank last week, they only see us growing 0.9%. Hey, we need a little bit more, and this is not going to help our case.
Yeah, David, I mean, we've also got Jackson Hole and then Fed and MPC next week. I mean, the consensus seems to be the Fed is cutting. Are they? Really?
Well, it depends, 25 or 50. Mr. Trump would like to see 150, but I'm not sure that's going to happen. There's a lot of pressure on Powell. In all fairness, taking a neutral position, Simon, they've got two mandates. They've got employment and they've got price stability, however you want to describe it. But you're starting to see weakness, and I'm just looking at targets numbers as well. There's weakness in the U.S. economy. The biggest problem is on the job side, and if that starts to weaken, then he's almost forced to begin cutting. So I think he'll be focusing on that side of it. Inflation is, yes, it's ticking up, but not to somewhere along the line. He's got to find that midpoint. I think the market is more inclined to 25 points in September. And this poor man, he looks miserable. Have you seen what he looks like? He's gaunt and grey and really beaten up by all the criticism he's taken. He kind of just sort of moves along. I'd hate to be in his position.
He's a central banker, David. He's meant to be gaunt and grey. It's the job description.
I don't know what they do. Do they go for a drink, or do they play Scrabble in the evening, or go to the New York Times and play Wordle and those kind of things? I don't know what central bankers do.
Moving
Monopoly.
on to Monopoly.
No, I just want to quickly jump in.
Yeah.
I think you've made a great point there, David. I mean, you think Trump might ask for the 150. 25 is up for grabs. I mean, it's crazy. If you look at the CME Fed tool, how this probabilities went. It went after the rate cut, it was 60% probability that they're going to cut on the 17th of September. A week later, it was trading at just over 80%. And then just prior to the PPI numbers coming out last week, it went up to 99.9. So exactly a week ago, 99.9% probability that we're going to see the cut. And then suddenly in 24 hours time, it went down to 90-odd% and now 85%. So I think a very important point that David, you made is if we see the 0.25%, I think the market is going to say, well, you know what, it's only going to be 3 cuts, it's not enough. I think if we see the 50 basis points, which you also alluded to, I think this could put a very interesting spin on Mr. Market going forward for the next month or so. Because I see there's nervousness in the market. You can see the NASDAQ is having a bit of a pullback for the past, let's call it 3-4 days. You can see there's a bit of nervousness. If we see that, let's call it 0.5 percentage point drop in the Fed, which is unlikely for now, but if we see it, man, this could be interesting.
We will take it, because I agree. I think that'll set some fire under a market. Schalk, something that, has fire, but not under the share price, under operations. Avenge, a couple of trading updates and then results out. In their defense, they've got 2 projects which are pre-pandemic and are an absolute disaster. is there, I mean, our once robust construction sectors down to handful of stocks. Is Avenge one that you have on a radar and give thought to and think there's opportunity?
I'm not saying no for the opportunity. I'm saying no, it's not one I'm looking at. Yeah, you mentioned it. I mean, it's two projects. The one I think in Singapore, the other one in Australia. And I'm going to get to Australia again. But just I mean, it's projects just not finishing. It's not finishing within budget. And for a company that made a profit of let's call it close to 38 million Australian dollars last year, now making a loss close to 85 million Australian dollars. That's a massive turnaround, and actually not good for shareholders. I got back to the drag, the ball and chain for this company, very similar to what Wilson Bailey Holmes had a few years ago. Remember that? I think what was Western Roads or some project that they had in Australia as well, and it just didn't finish. And it was then they had to change things, and eventually went way over budget, and eventually saw them exit that environment. I'm not even going to bring in Woolies again on the country roads and the David Jones. It just shows you again it's a tough market. The moment you cross the borders into other countries, you're in a different playing field.
David, I mean, 20 years ago, build up to the World Cup in the world. I remember you had a 2010 World Cup portfolio that was stuffed with construction stocks. There's nothing left, and those that are I don't know, ouch.
Marianne Roberts at one stage was 60 Rand a share. It's now gone.
Gone. Yeah, Group 5.
Remember, Avenge came down, I don't know, to about a 200 million Rand market cap. They recapitalized and had great promise. And then, as Schalk mentioned, two projects that they've got in Australia. And now they're back to a 600 million. I mean, that's the cost of their trucks. If you're in construction, those big tires on the trucks, I think cost that kind of money. So it's just a tragic situation. And you need the skills in construction. You can't fire people. You don't want a couple of chaps who've never been to university or just kind of building a bridge across a river. You need a little bit of skill to understand those kind of things. So it's been such a tragic situation here ever since 2010.
Yeah.
And I think the fixed investment in South Africa it's trying to pick up a bit on the road building, but there's absolutely no, and you see it in the cement companies.
Yeah.
You see there's nothing there. There's no investment being made.
Yeah, absolutely.
Very important. No, very important. I mean, you're touching on it. It's no investment. So they're struggling, like in Singapore, they're struggling in Australia. When you look at the local type of investments, it's just as you mentioned. I mean, since 2010, I mean, we're not talking about 2010. For the past, let's call it 10 years, we've seen that the building and construction, or let's call it I always refer to the Stats SA data that they release every month. The non-residential properties being completed.
Yeah.
The amount of non-residential properties that have been completed in the past 12 is less than what we've seen 2002, 2003. So, I mean, it's just crazy to think that we're not completing it. And that relates eventually. It's like I said, if you're not building roads and those type of infrastructure, if you're focused on non-residential building that, I mean, yeah, that's a tough market, serious tough market.
It is a tough market. A market that's, a BHP Group. So, I mean, we could be nasty and say it's the worst set of results in 5 years, lowest dividend in 8 years. Yeah. Schalk, the short answer is, I mean, it's the markets that they're in, the coal and the iron ore. They've got lots of copper. They're spending a ton on capex. Your thoughts on BHP, the results and the opportunity?
Well, they're not mining gold or PGMs currently, or gold currently. So, I mean, that is, as you mentioned. I mean, they did mention that the copper production is looking good. We know there's a bit of an uptick, but they mentioned, I mean, the iron ore and the coal has been struggling. But I mean, yeah, I think let's make a Chinese dish here. Sweet and sour. The sweet, definitely. We saw the dividend still ticking upwards. That was looking good. So I think that was maybe on the good side. The bad side, I mean, they did mention that things still were under pressure. But then again, on the good side, they said when they look at the outlook on the commodity demand, it does seem like they're a little bit more optimistic, for the latter part of this year, which I definitely concur with.
David, BHP for you, I mean, and the other part is, are they coming back for Anglo?
Oh, sure. Well, Anglo's got its own problems at the moment, with Peabody.
Yeah.
So I don't know where this is going to go. I don't know. I just pray that we get a commodity boom. Something happens. And I listened to Mike Henry, and he said, look, the only thing that's under our control is production, keeping costs down, and making sure those things work, safety and everything else. Prices out of their control.
Yeah.
And at the moment, there's no upward pressure on prices. China's not doing anything. It's not in the kind of shape. We haven't seen, he was talking about a copper price at 2050 and the copper demand. Sorry, he was talking more about demand going to be up by 70% by, I don't know, I think 2050. I think that's what I heard. But the price is not doing anything. It still remains below 10,000. So despite the fact that everybody's saying there's a shortage of copper's going to be in demand, no one's stocking up. At least they haven't got money.
Very similar to the story that we had. Very similar to the story that we had in PGMs about a year ago, where they also had the same story. And they say there's this massive demand, and we're going to see this pick up, and we saw nothing. PGM prices, platinum prices stayed around about the $900, and then suddenly, one morning we woke up and then they realized, wait, there is a massive demand. There is a shortage in terms of supply and demand.
Yeah.
I think, Simon, they're just grinding along. All the diversified miners. It's a tough environment, and that's why we need those rate cuts. Along the way, despite inflation, we need massive rate cuts to get people triggered again, doing things, as you mentioned. We need some kind of stimulus. It's not happening. And so you can look at the top 10 companies in the United States, or the top 20, the Mag 7, or it's a much bigger parcel. Outside of that, not much to get excited about. The other 480 shares in the S&P 500, nothing really happening.
Now, I take your point, absolutely. And it is a case of, they don't get to control much. All they can do is control production and safety. Schalk question just came in on the emails. Looking at insurance stocks, Momentum or Sanlam? Do you have a preference for either, or maybe one of the other insurers, although these are obviously the longer term? Schalk, for you, insurance?
Yeah, currently holding Sanlam, so therein lies my preference. It's a difficult one to choose. I mean, because I've been following Momentum, Metropolitan, and you can see things are now starting to improve. I mean, we've had this company, for many years, where they've look at it, turn around, some recovery, and you can see that the latest improvements been really solid, coming from Momentum. But I think it's neither here nor there. I would say if you believe in the continued recovery in Momentum and growth from that side, then that might be a good choice. But if you need the stability, I would still go for Sanlam.
David, have you got a preference in our insurance space?
It's Schalk mentioned, or was it you said at the beginning of the show, we're growing at 0.9% at the up end. In an economy that's growing at 0.9%, you're not going to sell policies. I don't think people have got the money to actually take something they don't really want. That's forced upon them. You've got to insure your life for it. Those kind of insurance policies. And saving as well. I don't think they've got the money to save. Yeah. So I think it's a tough industry. We're seeing it in the banks. And you saw today with Investec, Simon, that they're buying back their shares. Investec Holdings buying back shares, or just increasing it. They've got nowhere to put their money. Where a bank doesn't know what to do with its money, that's a really tragic situation. So I'd say it's tough. I don't know what Schalk does. I'm sure that wherever he is, but I don't find people banging down our doors wanting to deal with us, saying, I've got money and I've got to invest. I've got to go steal him from Schalk or wherever he is, down in Rainsurf. Who else is in Rainsurf?
That's why you don't know where he is. He keeps it a secret, so you can't come in and steal.
I don't, but it's tough out there. It's tough. I don't think wealth is being created here. As in boom years, and that makes it very difficult for companies in financial services.
Yeah, but it's like you said, it's a tough environment. But let's put that into some numbers. I mean, we heard that plants, Arsenal Metal plants, that's going to be closing in Pietermaritzburg. We're talking about 3,500 people losing their jobs. We'll be looking at the current plants for Mercedes and some of these car manufacturers in East London. Now I know there's no word on the street yet, but I mean they're talking about 15,000 people's jobs that's at risk. And to put what David just said, what is the first thing somebody does when he or she loses his job? I mean, eventually you switch off whatever you can do to stay alive, to eat. You will eventually switch off, some of these very necessary insurance policies. But yeah, I think it's a tough environment. We need, we're going to go back to that full circle. We need the economy to grow. We need the interest rates to come down for the economy to grow, to have sort of a repeat. We're sitting in a great environment. We're sitting in a commodity environment where gold price is higher. I mean, PGM price is higher. We're the largest platinum producer, second largest palladium. We should be doing much, much better. Much, much better.
Yeah, I take your point on that. We absolutely should. David, question came through. Please ask David. Palantir, it is up 4x over the last year. I must preface that up front. But the question is, it's down 20% in the last 4 trading days and is hurting. What's happening? This is just half-far stocks.
Well, economists came out with a headline saying this is the most overvalued stock ever, or something to that effect. And I think as good a company as it is, and as good a product as they produce, I think the share price has just gone completely out of line with their ability to justify it or to even make revenue to justify it. I'm talking about revenue at the top line. Mm-hmm. So I think that's what's happened. It comes out with great results, but I think just be aware of this as it starts to come down. So it's one of the few kind of bubble stocks that are around in that, that environment.
I think its price to sales is 1,000 times.
Yeah.
Pete Flynn was writing about it.
250 PE.
Yeah, I mean, Schalk, this is the sort of thing. I mean, is there an underlying business? Sure. Is there a crazy valuation? Sure. I mean, when the two meet, it can get volatile.
Yeah, I've said this before, Simon. I get this 2000 feel.
Yeah.
And we go into these presentations, and every single analyst are telling us AI is going to take over the world. It's going to be a disruptor. It's going to be crazy. Now, I've got no doubt that's going to happen, because if you turn the clock back to 2000, I sat in these same meetings where the same analysts were telling us the internet, that's going to take over the world. Well, what they didn't tell you is that the following 2 years, if you invested back then in the internet, which was basically your likes of Microsoft, your Cisco's, your General Electric, which built the computer boxes. I mean, if you invest in those companies at that height that the internet is going to take over the world. So there's spoiler alert. 2 years later, the internet did take over the world. You didn't have to go stand in a queue anymore to go to the bank. You just go online, you book your flight tickets. But hey, Microsoft was down 51%, General Electric was down 56%, and Cisco Systems down 76% in the following 2 years. I'm just worried about this whole AI hype. I love AI. I use it myself. I think it's going to be a great disruptor. It's going to be crazy. But man, 250 Ps, I don't know.
Yeah, 1,000 times sales is, the economist is right. It's crazy. Schalk, let's stay with you. Standard Bank question coming through. Maybe not very cheap, but looks really good. Liked the results. Schalk, those were good numbers from Standard Bank. Nice return on equity. Price to book at 1.4. I suppose that puts it kind of middle of the zone. Would you be looking at Standard Bank at these levels?
Easy. I'm invested. I love it. I think the moment I can invest in a bank and earn more in dividends than I can earn than putting my money actually in the money market with that bank, Hey, that's usually for me. It's a double tick. Yeah. Let's call it the 1.5 times price to books. Some people will argue it's much higher than what it was 2-3 years ago,
Sure.
and now it might get to an expensive point of view. Let's put this in numbers. 20 years average price to book for Standard Bank is still over 1.6 times. So it's definitely not cheap in that regard. And you mentioned the ROE. ROE, came out around about the 19% levels, and they actually mentioned that they're going to maintain it around about those levels. If you look at the 20-year average ROE for Standard Bank, at the same time it was trading at an average price to book of 1.6 times, it had an ROE of 16.5%. So in my view, definitely not expensive at current levels. I wouldn't be in too much of a rush to be selling this bank anytime soon.
David, a Standard Bank for you?
No, I don't like banks. I'm not a dividend man. I'm a 250 PE man.
Yeah, there's the old and the bold, and then there's David.
I come back to the worry. The fact that Investec's buying back shares.
Yeah.
If you look, the only one I like and I admire this bank tremendously is Capitec.
Yeah.
That to me, they just sweeping up private people, in other words, individuals out there. They're doing a wonderful job. Standard Bank, First Rand, Nedbank, they're battling. Apps are battling to compete with it. And if you analyze the results and you look at the growth in personal deposits, that's going nowhere. It's a little bit of banking here and there. So I agree from Schalk's point of view, they're well run, incredibly well run. All the metrics measure up to what you would want out of a textbook, and it's super dividend yield. But that's what it is. It's for old people, like old oak. Is that old oak?
No, oak as in tree, not as in oak, David. David, let's stay.
Oh, man.
David, let's stay with
You're
you.
taking more than my clients now. You're actually taking more than my clients.
David, question came through. I'm looking to build I'm an elderly man. I'm looking to build a dividend portfolio, some stocks ideas. We got to go in a moment. But David, quickly, British American Tobacco, surely a dividend stock worth a look at.
I don't buy British American Tobacco because of what it does. I don't like them selling cigarettes and that. That's a personal thing, but. The banks, and certainly a lot of the financial companies are giving you really good numbers and that's why if you are looking for dividend, I go with Schalk on Standard Bank and the various banks. What's also looking interesting is some of the property stocks. Simon.
Yeah.
Just have a closer look at them. It might be early days, but you're starting to pick up very attractive yields. I still like the long end of the bond market. This is not dividends, but I think you're getting very good returns at even at the highest level of tax, you're still making a real return. So there's certainly places in our economy and our market to get those, to get good returns.
Yeah, and with Schalk's earlier point, you get more dividend yield from Standard Bank than you do in a Standard Bank savings account. Schalk, we need to go to stock picks. You're going back to luxury, Richmond.
Yeah, it's a brand edge in this today. I mean, so let's disclaimers first. T's and C's. I've been an investor in Richmond for a very, very long time. So this is not one of you need to buy this and you'll get rich, overnight type of scenario. This is one of my largest holdings. It's been a fantastic quality company, but we've just seen in recent movement in luxury goods in general. The likes of Richmond's, LVMH's, all these luxury companies been hammered, been under pressure, mostly due to the tariffs. We've seen some decrease in demand coming from China, but I mean this company is sitting with 7.4 billion euros on the balance sheet. It's such a healthy company. I think the recent retracement in the share price is giving us a great opportunity to get back in if we haven't been in, and if you've got a bit of a small position, I definitely think this justify a larger one.
Yeah, and fun fact, that free cash could buy you ABSA. Yeah, could buy you ABSA. Just needed to run the numbers. David, you're going to buy dollars.
Yeah, I just think it's time. I like the dollars come under a huge amount of pressure this year. I know it was part of Trump's policies and that, but I think that's going to turn around. I think that U.S. is going to once they start reducing rates, it might hurt their bond market. But overall, you're going to start seeing growth come up, and I think it'll start sucking investment money back into the economy. So it's a good time to switch your rands into dollars.
Yeah, and we're at, about the 1760 level, which isn't we were 1990 earlier in the year back at Liberation Day, and here we are, 17 and change. But that's all for Stockwatch today. Thanks to our guest, David Shapiro, Sasfin Securities, buying dollars, Schalk Louw, PSG Wealth, Old Oak, buying Richmond. Up next to close, stay watching.